All right, let's jump right in. We're about to pull back the curtain on a tool that's kind of like giving you an X-ray of the market. It lets you see what's really going on beneath the surface. Forget the noise, it's time to see the actual structure with volume profile.
So here's what we're going to do. First, I'll quickly break down what this thing even is. Then we're not just going to talk theory, we're diving straight into real-world examples with Bitcoin and Forex. From there, we'll pull out the core principles, build a simple framework you can actually use, and wrap up with a really important, realistic takeaway. Sound good? Let's go.
Okay, so first things first, what even is volume profile?
You know the feeling, right? You're staring at a chart, trying to figure out where it's going to go next, and it just feels like you're guessing. Like you're just throwing darts in the dark.
But what if we flip that idea on its head? What if the goal wasn't to magically predict the future, but to get really good at reading what's happening right now and what just happened, to see where the big money has already left its footprints?
So think about those regular volume bars you see at the bottom of your chart. They tell you when trading was heavy or light. Volume profile is a total game changer. It flips that idea on its side and shows you where the trading happened, at what exact price. It's literally an X-ray showing you the market's anatomy.
Theory is one thing, but let's see this thing in action. And what better place to start than a market everyone is watching? Bitcoin.
We're going to break this down into a super simple three-step process. First, we find the important levels. Second, we figure out the story the market is telling us through those levels. And third, we turn that story into an actual logical trade idea.
So to understand the story, we're looking for a couple of key areas. The most important one is the POC, or point of control. Think of that as fair value. It's the single price where the most trading happened. It's the point of maximum agreement. On the flip side, we look for LVNs, or low volume nodes. See those thin spots on the profile? That's where almost no trading happened. It tells us the market basically sprinted through those prices, creating a kind of vacuum with very little resistance.
So how do we trade this? Well, if we know that an LVN is a low resistance zone, a vacuum, what happens when price re-enters it? It can move fast. So a potential trade idea here is that if the price pulls back into that zone, it can move quickly right back up to the top of the range simply because there's almost no volume there to slow it down.
Okay, cool, so that's crypto. But you might be wondering, does this logic hold up in other markets? Let's find out. We're going to jump into the biggest market in the world, Forex, and take a look at the Euro-USD.
And we're going to use that same analytical approach. We'll identify the context, we'll interpret what the market's doing, and then, and this is really important, we'll form a couple of different scenarios, not just one single prediction.
In this example, the price is trading up at 1.0850. But the volume profile shows us that the value area, where about 70% of the recent business was done, is actually down around 1.080. Since we're trading above that comfort zone, it tells us the market is in a state of imbalance. The buyers have pushed the price away from what was considered fair.
And this leads us to the critical question. Will the market accept these new higher prices, or will it reject them? So we have two scenarios. In scenario A, if the price hangs around up there and starts to build more volume, that's acceptance. The market is finding a new fair value, and the idea is to look for buying opportunities on any dips. But scenario B, what if the price just pokes its head higher and then gets slammed right back down into that old value area? That's rejection, a classic fake out. And the trade idea there is to short it, targeting that old point of control. So you see that? Bitcoin, Forex, two completely different markets, but the analysis hinges on the exact same core ideas. So let's distill all of this down into three fundamental principles. Okay, this slide right here, this is your cheat sheet. Let's make it simple. The point of control is like a magnet. It has a gravitational pull, always trying to pull the price back to what the market sees as fair value. The low volume nodes, those are speed zones. It's like an empty highway with no traffic. Price can just accelerate right through. And finally, the value area is your decision zone. If price is inside it, you're probably in a balanced, choppy market. If it's outside, things are getting interesting. That's where you look for trends and breakouts. All right, so we've got the principles. But how do you actually turn this into a consistent process you can use on every single trade? Let's build a simple, powerful framework.
This right here, this is how you go from just looking at charts to actually analyzing them like a pro. Before you even think about hitting that buy or sell button, you have to ask yourself these 4 questions.
It's a simple checklist. 1. Where is the POC? Where's that magnet? 2. Are we inside or outside the value area?
Are we in a range or a trend? 3. Is the price in a thick, high-volume area where it might get stuck, or a thin, low-volume area where it can move freely? And 4, the most important question of all, is the market accepting or rejecting the current price level? Answering these gives you your context. It gives you your edge. Now, before we wrap this up, we absolutely need to have an honest conversation about what this tool can and, maybe more importantly, what it can't do.
Let me be perfectly clear about this. There is no magic indicator in trading, and volume profile is no exception. It does not predict the future with 100% certainty. It just doesn't.
So here's the deal. What volume profile is a map that shows you the points of interest where the market has shown its hand. It is a fantastic tool for finding a statistical edge, but what it is not is a predictive system. And it is absolutely not a guarantee that you'll win every trade. Its job is to improve your decision-making, not make the decisions for you.
Ultimately, price can be misleading sometimes. It can get noisy, but volume shows you where the real commitment is. It's the footprint of money. And if you can learn how to read that, you're one giant step closer to understanding the true story of the market.